What's up everybody, and welcome back to the Intro to Investing series. If you're brand new to the series, what do we do here? We talk a little bit about what does it mean to invest? How do you get started investing? We go over some of the basics, so whether you're brand new to investing or if you're just looking for a refresher, this is the perfect course for you. In this video, we're going to talk all about what a trading plan is, how to create a trading plan, and move forward using this trading plan when investing in the stock market. So let's get started. So a trading plan is extremely simple. A trading plan is made up of three things. The first thing, you need to know when to buy. When do you even make the decision to get into the stock market? The second thing we're going to talk about is what to buy. So once you know when you should be buying, of course the next question you need to answer is, well, what should I be buying? And finally, the third and perhaps the most important decision you need to make is when to sell. I don't know how often I've heard people say, I've got this great stock, it keeps going up, but now I don't know when to sell it. I don't know when to take my profit. So when you can answer these three things, when to buy, what to buy, and when to sell, you've got yourself a trading plan. So let's take a look at each one of these. When we talk about when to buy, now assuming that you don't have the VectorVest software, VectorVest makes it very simple to know when to buy. We have market timing signals for almost any type of investor that it just lays it out. Now is the time to buy. You see your green arrow and it's time to go. So if you don't have the VectorVest market timing signals, what are some of the things that we can think about here? Now this might go against everything you've ever heard about investing. I know it's very common to hear buy, buy, buy. If the stock market is going down, it's time to buy because shares are cheap. If the stock market is going up, it's time to buy because you don't want to miss out on the rally. So conventional wisdom says it's always time to buy a stock because if it's going down, you're dollar cost averaging, and if it's going up, you're taking advantage of the ride. Well, this isn't the case. Here at VectorVest, we believe that you should only buy safe, undervalued stocks that are rising in price in a rising market. Now, of course, if you don't have all of the VectorVest tools at your disposal, it might be a little bit harder to see when these things are exactly rising, but you can graph a share and you can get an understanding if it's rising from the bottom left corner of the chart to the upper right corner of the chart, this share is rising. And the same thing for the overall market. If we look at depending on our time frame, if we look at a 3-month graph, a 6-month graph, a 1-year graph, we can see if the market is rising or not. So why do we want to do this? Well, we want to buy shares that are rising in price in a rising market because they're already doing what we want them to do. So for example, if I get into a share and it's already going up, unless something happens to the market or unless something drastic changes, that share is going to continue doing what I want it to do. So I don't have to worry about getting into that position and losing money right off the bat. No, if I get into the position and it's already going up and continues to go up, I'm making money right from the start. Now let's talk about when things get a little bit toppy. So if we're reaching new highs, this could be an excellent time to buy. But if we're reaching highs and we see a little bit of resistance up there, like the market or that share is testing resistance, and we're not a very aggressive investor, this could be a time to just step back and say, okay, yes, maybe the market is rising right now, but because it seems toppy, because it's experiencing resistance, I might just want to hold up and take a step back and wait a minute before I jump into the market. So very simple. Let's just remember that we want to buy stocks that are rising in price during a rising market. So now that we know when to buy stocks, let's talk a little bit about what type of stock we should buy. Now this is going to vary greatly depending on what type of investor you are. Now there are 4 types of investors. There are conservative investors, there are prudent investors, there are aggressive investors, and there are speculative investors. So let's take a look at each one of these just a little bit and kind of get a better understanding so that you can understand maybe what type of investor you are. Now a conservative investor pursues steady price action with low volatility. They look for longer holding periods. They want to hold the stock for a longer period of time, and they often pursue income. So a conservative investor might be looking for very safe, stable, dividend-paying stocks so that they can receive that passive income over time and have very limited volatility and very limited losses that could take place. Now let's take a look at prudent investors. Prudent investors pursue faster but still steady price action, and they're willing to accept some volatility. A prudent investor will hold for intermediate time frames. Growth is your primary pursuit as a prudent investor, but income is also a nice bonus. So you want to see that steady price action from bottom left to upper right, but a dividend is just icing on the cake. Now, a prudent investor may short the market when stocks are steadily falling, but you're not going to use stuff like leveraged ETFs. Next, we can talk about aggressive investors. Now, an aggressive investor, you're going to pursue faster price appreciation. You're going to hold for short time frames. Now, you're going to be willing to short stocks and even use leveraged contra ETFs. So what does an aggressive investor look like? If we're looking at a chart, we want to see some steep price action, relatively safe steep price action, but we're willing to accept that volatility. We want to get in and then we want to get out. You might consider yourself a swing trader. You buy a stock for a week or two, you take your profit, and you move on to the next. Now, finally, we have speculative investors. So let's talk a little bit about what a speculative investor might be looking for. You pursue explosive moves in price action. Now, you might be willing to hold on to a stock for a certain period of time, but you want to see those big gains. So we're talking about moves like when pharmaceutical companies get approved for certain drugs. We're talking about earnings releases where we see these huge price moves and you want to snag that gain as fast as possible, but you're willing to wait to see that explosive return. And absolutely, when the market's going down, you're willing to short stocks and take advantage of contra ETFs, leveraged ETFs, and all of that because the big gains are what you're looking for. We call these lottery ticket returns because the price might be chugging along and then boom, we see that giant increase in price. That's where you take your profit and you move on to the next one. Now, of course, everybody wants to see those lottery ticket returns, but we don't all have the stomach for it. So while you might be okay waiting and you might be okay with the volatility, a more conservative or prudent investor might not be able to sleep right at night because they can't handle the risk and they can't take that volatility. So of course you need to ask yourself what type of investor you are, what you're okay with. You know, what are you going to be able to accept moving forward? If you're constantly sweating and you're constantly worrying about volatility and possibly losing money in the stock market, of course you shouldn't be making aggressive and speculative trades. You're definitely a conservative or prudent investor. Now, if you view the stock market as a place where you can make some quick gains, some big gains, get in and get out, and you're okay with the volatility, you're okay with the risk, perhaps you're an aggressive or speculative investor. So ask these questions when determining what stocks you want to buy and what stocks are okay for you to buy. Now, once you found out what type of investor you are, you found out whether the stock market and those individual stocks are moving up or down at the current time. Now you know what to buy and you know when to buy. So the last thing you need to know is when to sell. Now, if you have a solid trading plan, you're going to know when to sell a share before you even get into it. Now, what do I mean by this? You're going to have stop losses and profit targets before you even make the purchase. You know, I was playing tennis with one of my friends over the weekend, and he said, I've got this great stock. And it was actually a recommendation by VectorVest, so I was pretty happy about that. But he said, it's up 20%, but my problem is now I don't know when to sell it. Do I hope that it continues to go up? Do I take the profit now? You know, I'm kind of lost as to when do I sell it. And this happens to so many people. They go into a position, but they don't have a plan on when to get out of the position. So we need to set things like take profits. We need to set things like stop losses. Are you okay with losing a little bit of money? Do you look at a 10% stop loss? Do you look at a trailing stop loss? If you hit a certain profit target, maybe 10, 20, 30% gain, do you take it then? There are a lot of things to look at when setting up your trading plan and looking at your exit criteria. You know, are dividends perhaps more important? What are the things that are important to you when investing? And these questions need to be answered in order to solidify your trading plan. So let's say that he did have a trading plan together, and when he got into that position and it hit that 20% profit target, well, he's okay with getting out of that position, and it removes the emotion from it. And once you're able to remove the emotion from trading and you follow your plan, you're going to see consistent winners. You're going to see consistent profit, and you're not going to lose sleep at night with all of the what ifs and the wondering. So trading plans are very simple. All we need to figure out is when to buy, what to buy, and when to sell. And when we can put all three of these things together, we have a trading plan and we're ready to enter the stock market. So in the next couple of videos, we're going to break down a little bit more about when to buy, what to buy, and when to sell, kind of get into the nuances, break down what it means to be a prudent, aggressive, conservative, or speculative investor, go through these in a little bit more detail, talk a little bit more about stop losses and profit targets and the such. So please, don't forget to stay tuned for that video. If you're not a part of the VV Nation already, guys, don't forget to click that subscribe button, like this video, turn on post notifications, share us with your friends. And as always, guys, I hope you have a great day.